Good evening, everyone. Welcome to the channel. Today I am going to talk about Angang Steel interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Angang Steel Company Limited offers a diverse range of businesses and services across various industries. The company's primary products include steel sheets, seamless pipes, wire rods, heavy rails, and profiles. Additionally, it provides ferrous metal smelting and steel rolling processing activities. The company also engages in the following services: wholesale and retail purchasing, importing and exporting of steel and goods, e-commerce transactions of industrial products, consulting and logistics distribution technology services, supply chain financial services. Furthermore, Angang Steel Company Limited offers various other products and services such as metal materials and building materials, compressed and liquefied gas metal ropes, coal chemical, coking and chemical products, dissolved acetylene equipment for gas and liquid separation and purification, steel trade activities. Its products are used in industries including machinery, metallurgy, petroleum, chemical, coal, electricity, railway, ship, automobile, construction, home appliances, and aviation. The skyrocketing stock price of Angang Steel, a macro-focused phenomenon. Angang Steel's stock price has surged an impressive 99.08% in the past year, driven by a combination of investor optimism and macroeconomic factors rather than the company's individual financial performance. The steel sector as a whole has seen increased confidence due to expectations of infrastructure initiatives and policy shifts, while hopes for U.S. Federal Reserve rate cuts have boosted investor appetite for metals. China's economic stabilization efforts and stronger-than-expected manufacturing growth have also contributed to the surge in Angang Steel's stock price. However, it is essential to note that the company itself reported a significant net loss in 2024, with analysts projecting continued losses in 2025. Concerns about dividend sustainability and overvaluation further complicate the picture. Ultimately, Angang Steel's skyrocketing stock price appears to be largely influenced by broader market trends rather than the company's fundamental performance. As investors continue to ride the wave of optimism in the steel sector, it remains to be seen whether this trend will sustain itself or eventually correct. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. 1. Sales of high-end products increased by 2.3% due to strengthened channel construction and sales growth in key projects. 2. Approval as a key pilot platform for cultivation led to increased application for national strategic technological forces. 3. Revitalization projects across 8 major product categories contributed to revenue growth. Revenue decline. 1. Operating revenue decreased by RMB 297 million due to various factors, including operating costs and exchange rate changes. 2. Dividends received from joint ventures increased, but this was not enough to offset the decline in operating revenue. 3. Government grants were not returned, contributing to the decline in revenue. These drivers highlight the key areas that impacted revenue growth or decline, providing a clear understanding of the company's financial performance. Net income and profit margins experienced fluctuations between 2024 and 2025. Initially, net income increased by 57.46% from -2,689 million RMB to -1,144 million RMB. However, it decreased by 12.35% year-over-year and 12.57% compared to the previous year. A notable increase of 17.6% was observed from June 2024 to June 2025. Profit margins underwent changes due to various factors. Despite a decrease in operating income of -12.35%, profit margins improved due to cost reduction efforts, particularly a decline in raw material procurement costs exceeding the drop in steel prices. The total cost per ton of steel decreased by 15.2% in purchased energy cost, 8.8% in logistics costs at headquarters, and 7.2% in quality cost per ton of steel. However, operating margin and gross profit margin experienced decreases of 2.59 percentage points and 14.79 percentage points, respectively. These changes highlight the complexities of net income and profit margins, influenced by both positive and negative factors. The company's financial performance indicates a positive trend in operating cash flow. According to the provided information, net cash flows from operating activities and operating cash flow both show a significant increase of RMB 405 million, indicating that the company is generating substantial positive operating cash flow. This suggests that the company's operations are profitable and capable of producing sufficient cash to meet its financial obligations. The company's debt level and interest expenses have undergone significant changes over time. While there are inconsistencies in the data, a general trend can be observed. Long-term loans have decreased by RMB 7,509 million, but long-term borrowings due within 1 year have increased by 218%. Total liabilities have fluctuated, increasing by 37.5% on some pages and decreasing by RMB 7,588 million on others. Interest expenses have generally increased across various pages, with significant increases noted in finance expenses and interest expenses. However, there are exceptions where interest expenses have decreased slightly. Overall, the company's debt level has changed significantly in some areas, while interest expenses have consistently trended upwards. Management is optimistic about the company's future prospects. The key areas of focus include embracing high-end, intelligent, and green transformation to stay ahead in the market, diversifying business and expanding globally to drive growth and profitability, improving operational efficiency and reducing costs to enhance competitiveness, expanding investment portfolio, and exploring new opportunities that align with strategic objectives. Overall, management is committed to a long-term strategy of innovation, expansion, and cost optimization to ensure sustainable growth. The company's financial summary reveals that it has engaged in 2 key shareholder return strategies. Firstly, the company has a history of paying dividends to its shareholders, with multiple instances documented across various pages of the report. Secondly, the company has also bought back shares from the market, as noted on page 115. These actions demonstrate the company's commitment to rewarding its investors and maintaining a strong relationship with them. Concerns about inventory buildup and supply chain disruption are evident throughout the financial summary. Inventory levels have been increasing, with raw materials inventory rising by RMB 285 million from December 2024 to June 2025. Additionally, work-in-progress inventory has also seen an increase of RMB 52 million. Furthermore, there are concerns about obsolete and unsold inventory, as well as provisions for inventory depreciation made. The impairment of inventory to net realizable value based on marketability and net realizable value evaluation is another area of concern. Fluctuations in raw material prices have also led to supply chain disruptions. The increase in accounts payable to suppliers indicates potential supply chain disruption, highlighting the need for companies to address these issues promptly to avoid further complications. That concludes the financial summary for Angang Steel. Feel free to comment below, and I will be happy to answer them when possible.